Is XRP the new king? Egrag Crypto explains. Now, imagine the entire global financial system as an enormous international airport. Every single day, millions of people arrive from different countries, carrying different currencies such as dollars, euros, yuan, and yen. Now, if every traveler had to personally find someone willing to swap their exact currency before they could buy a plane ticket, the entire airport would grind to a screeching halt. Chaos would erupt. To keep the world moving, you need a single shared runway that every airplane can land on, regardless of where it took off. Right now, this month of July 2026, the global economy is facing that exact problem. As the dominance of the United States dollar begins to fracture, nations are frantically looking for a replacement. But what if the answer isn't a new country's currency at all? A major thesis just dropped on X by the prominent analyst here, Egrag Crypto. It challenges everything we think we know about the future of money. Egrag Crypto asks a massive question. Is XRP the new king? The answer isn't what you expect. It turns out XRP doesn't need to conquer the world to rule it. So let's break down exactly how this network is positioned to become the invisible backbone of global wealth. So let's start with our very first question. Why can't China, the euro, or BRICS replace the United States dollar? To understand why XRP is stepping into the spotlight, we first have to look at the massive chess game happening between world superpowers. For decades, the United States dollar has been the undisputed king of global trade. But things are shifting. Everyone is talking about China, the rise of the BRICS alliance, and a changing economic order. Yet, according to Egrag Crypto, none of these massive powers actually have what it takes to replace the dollar outright. Take China for example. They have an absolute powerhouse of an economy, but there is a massive catch. The yuan is heavily managed by the state. It does not allow for the free, unrestricted movement of capital across borders. International mega corporations and central banks are terrified of putting all their fate into a system where the rules can change overnight on a government whim. The euro faces a different problem entirely. It lacks a unified fiscal structure, making it too fragile to carry the weight of the entire world on its shoulders. Now, here's my opinion. I look at the BRICS alliance and see a classic case of too many cooks in the kitchen. You have nations with completely different political agendas, distinct economic structures, and zero monetary integration trying to agree on a single shared reserve currency. It's a logical nightmare. So my view is that the era of a single nation dominating global finance with its own currency is drawing to a close. Trust between competing superpowers is at an all-time low. No Western country is going to willingly settle trades in yuan, and Eastern superpowers are actively trying to escape the dollar. The world doesn't want a new king. It wants a system where no single country holds the crown. Now, why do gold and stablecoins fall short in the modern digital era? If fiat currencies can't do the job, what about the traditional safe havens? Central banks around the world have been buying up gold at historic rates. Gold is completely politically neutral, nobody owns it, and it can't be printed out of thin air by central bank. At the same time, the digital asset space has given birth to stablecoins which move billions of dollars every single day with incredible ease. But Egrag Crypto points out a massive flaw in both of these options. While gold is incredible store of value, it is fundamentally trapped in the analog world. Try sending $1 billion worth of physical gold bars from New York to Tokyo to settle a trade in 3 seconds. It's impossible. It lacks the speed, programmability, and instant liquidity required for a fast-paced digital economy. On the other side, stablecoins have the tech, but they have a fatal design flaw. They are almost entirely pegged to the United States dollar. They aren't a replacement for the old system. They are just digital masks wearing the old system's clothes. Now, here's my opinion. Stablecoins are a fantastic short-term tool for everyday retail traders, but they are completely useless as a neutral global reserve asset. If a foreign nation wants to bypass United States financial surveillance using a token that is backed by United States dollar held in a United States bank account, completely defeats the purpose. Gold is the opposite problem. It's the ultimate shield against inflation, but you can't run a digital global economy on heavy metal. We are living in a society that demands instant gratification and instant settlement. The market is practically begging for an asset that possesses the political neutrality of gold, combined with the lightning fast processing speed of a digital token. Now, how does XRP function as the ultimate neutral settlement layer? This brings us to the core of Egrag Crypto's thesis, and it is a massive paradigm shift. The future monetary system isn't going to be a winner-take-all arena. It is going to be a hybrid model. The dollar, the euro, the yuan, stablecoins, tokenized real-world assets, and gold will all continue to exist simultaneously. They will all serve their individual purposes. Instead of trying to wipe these assets out, XRP is designed to sit quietly beneath all them. Egrag Crypto explains that XRP's true value proposition is its ability to act as a neutral liquidity bridge. The XRP Ledger can take an asset on one side, whether it's gold, fiat, or a central bank digital currency, and convert it into completely different assets on the other side in less than 5 seconds for a fraction of a penny. XRP doesn't need to replace the dollar or gold. It acts as the universal translator that allows them to communicate instantly. Now, here's my opinion. I believe this is the most realistic and bullish outlook for XRP that anyone could possibly present. For years, people have mistakenly thought that for XRP to succeed, Bitcoin has to die or the dollar has to crash to zero. That's just blind tribalism. So in my view, XRP's true genius is its supreme lack of ego as an asset. It doesn't care who wins the trade war between the United States and China. It only cares about being the infrastructure that both sides use to settle the trade. It is the ultimate financial diplomat. When you realize that XRP is building the Internet of Value to connect trillions of dollars of existing wealth rather than trying to build a system from scratch, the long-term utility becomes blindingly obvious. And finally, here's our overall conclusion. When we piece this entire puzzle together, a very clear picture emerges for the future of global finance. The old world of relying on a single country's fiat currency to dictate international trade is becoming entirely unsustainable. Superpowers don't trust each other. Stablecoins are too heavily tied to the dollar, and physical commodities like gold are simply too too slow to keep up with the modern digital world. Egrag Crypto's thesis here completely redefines what it means to be the king of crypto. XRP's crown isn't won by destroying other currencies, but by serving them all as an irreplaceable, politically neutral utility network. As central banks and major global financial institutions move deeper into tokenization throughout the remainder of this year, 2026, the demand for instant low-cost cross-border settlement is going to hit unprecedented heights. Ultimately, the true value of XRP isn't determined by short-term speculative hype or retail social media trends. It is anchored directly to its institutional connectivity and its raw utility as a bridge asset. By positioning itself as the core infrastructure for the Internet of Value, XRP doesn't just participate in the global financial system. It becomes the very highway that the entire global financial systems runs on. And this finally ends our video. Thank you very much for watching and see you on the next one, or you might just as well check this next recommended video right here.